China's exports grew at a double-digit pace in May as factories restarted and logistics restrictions eased.
The problems with trade didn't have to do with supply and demand so much as, the obstacles that the virus created.
Meanwhile, the Biden administration has confirmed its move to reconfigure some of the tariffs on Chinese goods that the Trump administration had imposed.
So if there's a gradual removal or lifting of these tariffs, that could again add to the trade momentum.
So when China's trade growth recovers, how long can it last? China's trade growth rebounded in May after anti-virus restrictions in Shanghai and other industrial centers eased.
The problems with trade didn't have to do with supply and demand so much as, the obstacles that the virus created. So there still is the basis for trade.
But as uncertainties remain, it is still too early to see a forward momentum in trade.
One, of course, is that the price of a lot of Chinese imports has been elevated, particularly by the impact of the Ukraine war, which has raised food and fertilizer and fuel prices. And these are all things that China imports. And so even if the money value of Chinese imports is high, actually the money's buying less because the prices are higher, so the actual physical volumes might be off somewhat. And exports will also not recover to their levels of last year because the world is entering a recession. And so world demand for Chinese exports will also be slowing.
However, there might be some silver lining for China's trade growth. U.S. Treasury Secretary Janet Yellen has said the U.S. would cancel some of the tariffs on Chinese goods in a bid to reduce U.S. inflation. The Trump administration used Section 301 of the Trade Act of 1974 to slap heavy duties on Chinese goods, which were inherited by the Biden administration. Now, the first batch of tariffs on $34 billion worth of Chinese goods are set to expire on July 6th.
The inflation in the United States is very high. Well, one of the simplest ways to cut inflation would be to cut the tariffs with China, because the estimates are that the average American household is paying several $100s a year out in extra because of the American population, of course, is paying for the tariffs from China. China doesn't pay the tariffs. The US population pays the tariffs. And so you could have a cut inflation immediately by removing the tariffs. That would be entirely economically logical.
China is expecting the cancellation of all U.S. tariffs on Chinese goods. A Chinese Commerce Ministry spokesperson said this would be in the interests of businesses and consumers and would benefit both the economies and the whole world.
The other thing that's interesting about that is whether there's a quid pro quo coming from the Chinese side. And, China has offered actually a pretty good trade deal to the European Union. And if that sort of trade deal would be on offer with the United States too, there could actually be further expansion in trading relations. I actually think this year would be a good year to do that because the upcoming Chinese Party Conference and the American election, both in November, mean that the political leadership in both countries has an incentive to show some positive movement on the most important trading relationship in the world, which is, of course, the US-China trading relationship.
However, the most important trade relationship does not necessarily generate the highest trade volume. Data has shown ASEAN, the 10-member association of Southeast Asian nations, retained its place as China's largest trade partner in May. However, the U.S. is also aiming to boost economic ties with its Asian partners.
Biden launched the Indo-Pacific
U.S. President Joe Biden has announced the Indo-Pacific Economic Framework for Prosperity, or IPEF, with 13 partner countries in the region. But it's still not clear what exactly the IPEF will do.
I think from what we are seeing now, it's not really a traditional trade deal. It does not provide any sort of increase in market access to these countries, which is what they are hoping for, what they are expecting, what they're wanting. So it's not clear what are the real benefits, what are the substantive economic benefits these countries can actually get. This is, I think, one drawback of this framework. It's too ambiguous, right? It's too broad. It's too unclear at this point.
This month, U.S. Trade Representative Katherine Tai said that the Biden administration would begin trade negotiations to fuel economic activity and investment. But it still remains vague and overambitious, with other pillars thrown in like tax and anti-corruption. It's not immediately clear how it will work and who can really benefit.
Well, I don't think the United States policy is going to be extremely effective. As it was put in an article in one of the leading Western papers, the US Asian policy is all guns and no buttons, by which they meant that the US is making big moves on military things.
I think by excluding China from this framework, it's really not a very sensible, a move, right? Is it really trying to increase the US's economic footprint in the area and try to promote the regional economic stability and growth, or there might be some geopolitical, purposes to it? Because, when you think about supply chain, when you think about climate change actions, how can you exclude China?
Although China's trade still faces strong headwinds, there now seems more indications of weathering the storm, and scrapping the tariffs would certainly add ballast.